Hello traders, how are you guys doing? Welcome back to my YouTube channel. Yeah, I wanted to thank you guys and also say sorry for my last video, because my last video there was a lot of mistakes, a lot of misinterpretations, a lot of miss many things, you understand, because I was nervous and I was out of my element. So I guess I'm trying to better myself as we move on, as we go up and up and up. I'll be bettering myself. I'm not perfect with this, but I'm here for the long game, you understand. That's why this my YouTube channel is existing. So I want to take you guys through a couple of trades that I'm looking to get involved with. So let's get into it. A couple of trades. I'm going to take you down from the top down analysis, from the higher time frame to the lower time frame, why I'm looking to sell or buy from there. So let's get into it. Thank you. Yeah, welcome to my YouTube channel once again. So I have a couple of trades that I am looking to sell. But first of all, I'm going to take you through why I'm looking to sell from those areas. So walk with me. First of all, whenever I came inside my trading view, just like this, first thing what I'll be looking at is I'll be looking at the market through so many lenses, so many possibilities. If I think of buy, if I come back again, I'll think about, if I'm thinking about buying from here, why can't I think from selling from here? Like, I have to counter myself, like check the opposite 2 times. But first time I have to come to the market, then I have to go with the SMC market structure. First of all, when I come to the market, I'll just check the SMC. After the SMC, then I'll check the support and resistance. After that, then I will now dive into my entry model. My entry model is QMR, because the model or reversals or something pattern, they call it algo structure. So whenever I come to my trading view early in the morning, or London session or New York section, what I'm looking at is something like this. First of all, I'll be looking at, you guys suppose know, as I said before in my previous video, that this channel is not for beginners. So if you are beginning, please, here is not for you once again. So once I come into the market like this, I'll be looking at something like, if the market is trending up or down. First of all, I'll be looking at, we all know that this is a bullish market structure. This is a bullish market structure, and then this is a bearish market structure. So once I come into the market from the higher time frame, I would like to get the perspective of where we are on the higher time frame, because then on the higher time frame, then I'll narrow it down little by little. So if we are like this, higher high, then when price comes back, it will mitigate some sort of fair value gap or other block or anything of significant, breaker block, mitigation block, and then it will go back up and then break structure and then come back again and then break structure. That's how you know that you are in an uptrend. Same in the bearish markets like that. So when it will be, there's a move, there's a reversal, and then another move, break structure, and then reverse again, and then break structure. So whenever I come to the market, this is what I'm looking for. So let's get into it. This is USD SGD, that is United States Singapore dollar. So what I'm looking at here is like I have something in here in the 3 months time frame, and you guys see what I'm seeing here. I'm seeing a bearish structure on the 3 months time frame, on the SMC structure, based on SMC structure. So we have a impulsive move, and then retracement, and then break of structure. There's a break of structure here. Okay, break of structure. Sorry about this. So as you can see, there's a break of structure around here. Sorry about that, guys. Sorry. So there's a break of structure here, which indicates that we are in a bearish market. So price has to retrace to some sort of order block. As you can see, there is an order block right here. So price mitigated the order block and it's reversing. So that's a part. Let's follow it on the support and resistance aspect. So right here, price mitigated an 3 months resistance level. As you can see, 3 months, because if you can see right here, when price came to this place for the first time, there was a reversal, immediate reversal, like an immediate, like there's some sort of energy in there that is pulling the market back from there, and then it came back again, then another sell pressure again, and then it came back again, and then another sell pressure, and then it came back again the same time, and then there is also another sell pressure. 3 times it did. So this makes this area a very strong area of resistance, a very strong area of resistance in a 3 months time frame. So what I'm looking at on the 3 months time frame, I'm looking at these lows to be taken out. I'm looking at these lows to be taken out, this low to be taken out, because we are in a bearish market, and in a bearish market, this right here right now is a weak low. So I'm looking for this low to be taken out. So let's get into it. So in the 3 months time frame, we have the upper zone, the middle zone, and the lower zone. So on the 3 months, price when came back, it broke below the middle zone, which you guys should know this this candle pattern by now, evening star candle formation in there. So let's go to the monthly time frame. So the monthly time frame, you can see in the monthly time frame, price created the same again, an evening star candle formation. Evening star candle formation is a formation, is a candle pattern where you see whenever reversal is about to happen, or bearish and bullish engulfing candle, or bullish and bearish harami. You understand? So we have the same, and also price also breaks below the monthly support area. Price breaks below it, like aggressively, as you can see, very aggressively. Price the monthly is the green, this green box you are seeing right now. Price breaks below it, which indicates that we are heavily bearish. We are heavily bearish. You understand? So we are still in here. Okay, sorry, in here, as you can see, this is a monthly again monthly lower zone. As you can see, the price tap into the monthly supports, and then it's reversing. So if I would have caught price below here, I would have been looking for buys back to here, back to somewhere around here or here. You understand? That's what I would have done if I would have caught price here. But nevertheless, let's go to the weekly time frame Pretty much the same thing on the weekly time frame. Price breaks below the monthly support area, and then price breaks below it, and then came back and retests it with a rejection candle. I also call it an evening star, if you can see it very correctly, indicating again a very bearish order flow. Rejection candle, it's called rejection candle. So then again, on the daily time frame, pretty much the same thing. As you can see, if you can see it well in the daily, you can see we are bearish. Higher high, higher low here, lower low, lower high, because this high is lower than this high, and then lower low, lower high, lower low, lower high, lower low. Then I'm expecting price to create something like a lower high around here, and then sell directly into this 3 months area of support. So this is what I'm looking at. Okay, so as you can see, pretty much on the lower time frame, and that means the daily, that we are heavily bearish. If you can see it, we are heavily bearish, like bearish. So what am I going to do? I'm going to look for sell opportunities, because I want to trade according to the higher time frame bias, because according to higher time frame, the price is heavily bearish. So this is what I'm looking at. Okay, on the 4-hour time frame. Okay, first of all, before we go into, I want to take you guys through my model, what I trade whenever I come inside my trading view. Like, I'm always looking, because I always trade with the trend. So whenever I come to the market, I look for continuation patterns, like continuation. So here I showed it on my last video. What I'm looking for is something like this: a high, break, sweep of the previous high. Sorry about that, guys, I just bought, sorry. And then a break of structure, and then a retracement, something like this, and then another break. This is what I'm looking for whenever I come to my trading view. It's a continuation pattern. Which means whenever price comes back and sweeps this high is called a structural liquidity or an engineered liquidity. So when price comes back like this and tap into some failed order block around here, like the Quasimodo, we call it the QMR, Quasimodo reversal, some order block right around here, the failed order block right around here. Don't worry, guys, I'll still make videos someday to explain to you how this model works. I'll explain this continuation model right from the ground to, like, I'll explain it well to you, some of you that doesn't understand it, but I'll explain it someday, but that day is not today. Let me just touch on it a little. Then when price sweeps this high, it will just sell, and the target will be the low. Always. So this is what I'm looking for. This is the type 1. This is the type 2. A high, a sweep of the high, structural liquidity, which is in the engineer liquidity, and then a sweep. So this is what I'm looking for whenever I come to my trading view. Something like this. So a high, a sweep of the previous high, and then before the break of structure, price will create an engineered liquidity or structural liquidity before it breaks. And then when price comes back, it will sweep the structural liquidity, and then boom, it will sell off. Same applies to the buy. It's some like this. If you invert it, it's still the same. If you are looking for buys, something like this, you understand? A sweep of the previous low, and then a break, and then a structural liquidity and break, and then when it comes back, it sweeps the engineered or structural liquidity, and then it will buy off. You understand? Same with the type 2. So that's what I'm looking for whenever I come inside my trading view. So let's get into it. So as you guys have seen my top down analysis, so on the 4 hours time frame, as you can see right here, we have sorry, let's start from the daily. As you can see from the daily time frame, when price can mitigate the area of the 3 months area, 3 months support that turns resistant, because price broke below it, which means now it turns resistance. So price came back to retest it, then after retesting it, breaks again. Then on the lower time frame, there is some sort of resistance here on the 4 hour time frame, some sort of as you can see, I marked it with another color. So when price breaks it and then came back to the 4 hour 4 hour area of resistance, and then also sell off from there, it doesn't come back again because there is some sort of support resistance around here. So I'm still looking for, because price made a lower low, so I'm still looking for price to come back and create a lower high that will lead to selling off to the 3 months area of support that is in below. So on the 4 hours, this is what I'm looking for. You see, a high and a break of that high, mitigated an order block, came back, creates the structural, which is engineered liquidity, and then break structure, which means I'm looking for a retracement. It's retracing slowly, but it's hard to watch since last week, I guess. So I'm looking for the retracement back into here, back into this area, into this 4 hour order block, because this the Quasimodo reversal, this failed order block has already been mitigated around here, around the structural liquidity has already mitigated the failed order block, the QMR. So I'm using the overall 4 hour OB order block. So I'm expecting price to come back around this order block and then sell off from here. So this is what I'm looking for to sell from here. So I'll be updating you guys on how it goes. If the only thing that will make this trade invalid is if this trade, it mitigates the 3 months area of support before it comes back, then the trade will no longer be valid. But if you didn't mitigate the 3 months area of support before it comes back, it's still valid. But as of right now, it's still valid. If it's no longer valid, I'll still come back and show you guys why I'm no longer interested in taking the trade. But as of right now, still sitting in a beautiful area, in a beautiful 4 hour resistant area. So it's a beautiful trade that I'm waiting for it to come back and mitigate, and then I will sell. So another one, I have another one on the US dollar Norwegian krone, USD NOK. So here we are on this one. On the 3 months time frame of this structure, we are still bullish. We are bullish. Look at this. A break of structure, retracement, another break of structure, retracement, another break of structure, retracement, and then it comes around here and then it's reversing. Why? I believe on the 3 months time frame, because it hits on the previous support, previous resistance of the 3 months time frame, so it's reversing. I believe the reversal is just temporary, just to get into somewhere around this area, around this fair value gap, before it will reverse again to break the overall structure. My personal opinion, my personal view, this is what I'm seeing. So as you can see, price is reversing after hitting the 3 months area of resistance. It's reversing with a bearish engulfing candle. As you can see, it 3 months bearish engulfing candle. As you can see, the red candle swallowed the green candle. Is bearish engulfing. That is, it's a reversal pattern. That's the main reason I'm looking for sales only in here, because of that sign and that signal. And if you can see it on the 3 months, on the monthly time frame, there is an evening star. What are the chances? On the 3 months time frame, there is a bearish engulfing. On the monthly time frame, there is an evening star candle formation. All these candles is a reversal pattern candle formations. So forgive me, but I'm looking for sales until price gets in somewhere around here, around this 3 months or middle zone support, and then we'll break the structure, because as you can see, the structure is waiting to be broke. So I believe it will clear all this liquidity, because all these lows here, it's all liquidity. So I believe it will clear it till here, somewhere around here, and then it will buy up from here to break this overall structure. This is what I'm seeing. So for right now, I'm still looking for sales into this area. So as you can see on the weekly time frame, we have the upper zone and the lower zone. On the lower zone, the resistance and the support. Then price breaks below the support, the weekly support, with an evening star candle formation. Sorry about that. With an evening star candle formation, as you can see it right here. The weekly candle that breaks below the weekly support area was very big weekly candle with a very big momentum. As you can see it indicates a very bearish market, very bearish. And in the weekly time frame, as you can see, we are previously on higher in high what is it called, bullish markets. As you can see, break of structure, break of structure, break of structure, break of structure, failed, break of structure. This is failure swing, break of structure. So price is coming down here. I think it's it's already changed character. See, it already breaks below and closed below this last low. So that is a change of character. That is a market structure shift. So as you can see, I'm waiting to join in on the sell, on the sales continuation, to get the price around here. So that is what I have on this USD knock. So let's get into it. On the daily time frame, as you can see, price breaks below, comes back. There is some sort of 4-hour resistance area here. On the daily time frame, it created again, pay attention to the details, pay attention. It created again a bearish engulfing pattern. bearish engulfing. As you can see, its price just mitigated the weekly support resistance. It's a support turn resistance. As you can see, price breaks below it and came back to retest it, and then price retest it, and then on the daily it created a bearish engulfing pattern, which indicates that we are still, that sellers are here. And as you can see on the daily, we have an inducement. We have some inducement here. As you can see it written, I'm using this some sort of indicator in here to identify the inducement area. So as you can see, I'm waiting for price to come somewhere like this to create the higher low on the 4-hour support, 4-hour resistance to sell off. So this is what I'm waiting for. So as you can see, so I came here and I saw my continuation model. As you can see in here, my continuation model is like this: a high and break of that high, sweep of that high, sweep of the previous high, and then a failure swing, and then structural liquidity, and then a break of the overall all low, and a break, and then price is retracing around here to sweep this structural liquidity. So I'm waiting for price around here to sweep this high, then sell off. So this is what I'm waiting for on the 4 hours. So this is the two trades that I'm waiting for right now. The sales that I have, I will still tell you guys when it plays out or when it doesn't play out. So I'm setting a limit order. I'm targeting this low for the overall break of structure of the 4 hour. I'm using the quasi-mode or QMR because, as you can see, the failed order block, the previous high that failed, the order block has not yet been mitigated. As you can see, that's where I placed my order, and my stop loss above this high, little bit above it. So I'm waiting for the price to come back and mitigate it around here. This 4 hour resistance is around there. My reversal model is around there. So everything aligns with the way I trade. So I'm waiting for the price to make its way back in here and then sell off, and then comes to break, because to breaks this low to give us a new break of structure. So this is what I have. If you enjoy this, you let me know. I've got more videos, more explanation coming for you guys. So I'll catch you guys when the trade plays out, or it does not plays out, or something happened, but I'll still update you guys. So for now, thank you and keep on grinding. For now, I'm learning my lesson to keep a limited order, even if it's just because I like to risk like 1% of my account. So for right now, I'm placing an order like the 1%, half of it, which is 0.5%, waiting for me there. So when price comes back in there and give me the confirmation I need on the lower time frame, on the footprint chart and the order flow chart, then I'll jump on it with the full margin, the full 1%, and then I'll ride it. So thank you guys for staying till the end of this video. Thank you. Please, if you haven't subscribed, please subscribe, like my video, and comment. I have a lot of videos like this, a lot of signals, because this is some sort of signal. So if you saw this video, you can still jump on it. Thank you.